Welcome to Black Cat Crypto Club, everybody. My name is Drake. Today we've got a video that has taken me a lot of getting into and working out because I want to get this video right for you guys. And this was a video requested by viewers. So this goes back to a previous video where I kind of stated that you can live on your assets without having to spend them. And that sounds crazy, but people have been doing this for, many successful people do this now, and they've been doing it for decades or longer. So it's going to be a good video, guys. Before we get into it, I'm going to jump over here. If you haven't already, head over to ezsrescueranch. The PayPal is at the bottom of this flyer. If you can throw these guys a few dollars to help out these animals, it's always appreciated. I'm not affiliated with these guys in any way. It's just something that means a lot to me. So if you can go over and help these animals out, that would be amazing. Now, before we get into it, I've got to say a few things. There's always a thing in the description of my videos where it states, all the legal stuff, that I'm not a financial advisor and that anything you see on my videos is really for educational purposes. I'm here to help provide information that I know about and things that I'm seeing, the news and things in the charts, these kind of things I'm sharing with you guys for educational purposes. And this video really kind of warrants me coming out and saying that, because this is information that shouldn't be taken lightly. And to be honest, this probably isn't going to be something for everybody. It's not going to be something for most of you guys, probably. But I am going to show you this. It's something that is valuable to know, even if you're not going to use it. So that said, we are going to get into how to collateralize your assets and be able to take a loan against those assets, live off them, repay that loan, build on your assets, and never have to cash out your initial assets in the whole process. So you're not taxed on those assets that you collateralize or anything. It's beneficial in that way, but we're going to get into all of the specifics, and I'm going to run you through some scenarios. And I'm going to use this last cycle as an example because we have that data and I can kind of show you guys how it would have worked in this last cycle if you were going to use this method. So we're going to jump over. I've prepared a simple Excel sheet for you guys. So first of all, there are ways to do this already with Bitcoin, but really this works with any asset. You can do this with any asset. And there are companies that will collateralize Bitcoin for a collateralized loan. Coinbase actually used to do this until the SEC came after them in 2023. And then I think they kind of decided to move away from that until they got things worked out with the SEC. But there's several other companies that do this. And to be honest, in the next few years, where Bitcoin has gotten approved for these spot Bitcoin ETFs to be traded on Wall Street, we now have Bitcoin in the mainstream market. And I do see there are some banks that probably do these kind of loans on Bitcoin as we speak. But you're going to see a lot more banks coming around to that, because this is one way that banks can pivot. Like I've always said, you know, these banks are going to have to learn how to pivot, because they're not going to be able to earn money the way that they used to. So this is one way that banks can pivot, and I see it pretty inevitable that they're going to start collateralizing Bitcoin for loans like this. Now, also, if you are getting into this and thinking about doing this, a few things that I think you really should consider is, one, you should really have the knowledge of this system as well as anything surrounding the asset that you are collateralizing. So if you're doing this with Bitcoin, you really need to be immersed in everything Bitcoin. You need to have the knowledge of cycles, what the market's looking like, everything. Or you need to have somebody that does have that knowledge that's going to be advising you. And like I said, guys, I am not that guy, so don't come asking me about this. I will always share what I know, but I am not your financial advisor. So, that said, I would also be very careful with how much of your portfolio you use to do this kind of thing. You're not going to want to go 100% in with everything you own in Bitcoin or any asset and go into a loan like this. And I'll show you why here in a minute. But with all of that said, we are actually going to use the 2020 cycle as kind of an example, just to show you how this would work back in 2022. And I'm going to jump over to the charts really quick to kind of show you guys this. So we're going to look right around in this area, because if you're going to use this example, the best time to do this is when the markets are bottoming. Okay, so you don't want to take out a loan clear up here at the very top of the cycle. I'm going to show you why here in a second, but we're gonna use this. This is in 2022, right here, when we bottomed out in Bitcoin's cycle. And I actually, right here, this big drop right here, this was FTX, when FTX failed in November of 2022. And I remember it pretty vividly. I was actually driving to California and I heard all of this news going down. And I got to California. I spent a week or two there. And right about here, I bought Bitcoin again. Again, guys, I held all the way down this whole way. But right here, a few weeks after all of that went down, I ended up buying more Bitcoin at like $16,000. Because I knew the bottom. I mean, I had a very good idea that the bottom was in. And so we actually went down to 15.5 or so. But I basically called the bottom of the market and got in at 16,000. So really close, guys. And not many people get that close when they're going with things. And admittedly, I probably got very lucky with that. But we're going to use this as an example. Let's say we get down and we call the bottom at this like $20,000 mark, right? So this is going to be important. So we decide to get into a collateralized loan when Bitcoin is at about $20,000 right here before this FTX crash. Okay, so we have $100,000 worth of Bitcoin. After all of the bull market and the bear market, we have 100,000 that we're willing to use for a collateralized loan. Again, you don't want to use all of your Bitcoin for this, and I'll show you here in a second. But we have $100,000 worth of Bitcoin. We put it forward as collateral, and with collateralized loans, the loan to value on loans like this is usually no more than 80%. But in this whole example, guys, I'm going to be really conservative, and I don't want to get so optimistic that it's just unreal. I just want to be very conservative on all of these numbers for you guys. So we're going to go with half of that 80%, and we're going to go with 40%. So 40% loan to value on this collateralized loan. So 40% of 100,000 is 40,000 that we can take on a loan on this. And again, being conservative, this is probably high, this APY, this interest rate, but we're going to go with a 10% interest rate on $40,000. So I take 40,000 in loan and I use half of that, let's say. Again, just an example, but let's say I use half of that, take $20,000, and I use it for whatever expenses I want. If I want to buy a car, if I want to use it for living expenses, whatever. I just take this 20% right off the top and I use it for whatever I need. I take the other half, this other $20,000, and I put this back into Bitcoin. So I buy $20,000. Again, we saw on the charts, we estimated that the bottom was in at $20,000. And so we buy $20,000 worth of Bitcoin at $20,000. Conveniently comes out to 1 Bitcoin. So easy to imagine. Anyways, we go forth and we have this $20,000 worth of Bitcoin that we bought in October of 2022. Right here, we buy in October of 2022 for right at about $20,000. So back over to Excel, we have that 40,000 or 40% loan to value. We've taken out $40,000 against $100,000 worth of Bitcoin. But guys, remember back here on the charts, after we bought at $20,000, we had this FTX drop. So we didn't call the bottom exactly. And in fact, crashing from $20,000 to $15,000 is a 25% crash. So this is not a minor thing, but we still got pretty close to the bottom. But taking that 25% hit, if we go back over to our Excel, after Bitcoin crashes from 20 to 15 in December of 2022, we now our loan to value, we've taken 40,000 out, but the value of our collateralized Bitcoin that we put forward is not worth $100,000 anymore. It is only worth 75 after we've dropped. So now our loan to value is 53%. So at this point, this is when the bank says you need to come back and bring this loan into value. You know, we need to make this happen. And if you do this with 100% of your Bitcoin and you have nothing else to put forward for this loan, this is when you get into trouble. And this is when you can possibly lose that Bitcoin to the bank or to the smart contract or, you know, whatever. So you've really got to know your loan terms. And if, like, I wouldn't get into any loan that doesn't give you the chance to raise your collateral. So in this case, let's say the bank comes to us and says, hey, your loan to value is higher than what we allow. We need to bring that back down to that 40%. So if you don't have all your Bitcoin in, you can easily take more Bitcoin, collateralize it further, and bring this into that loan to value of 40%. But you can see how this is one of the big risks with collateralized loans. And this is why you need to, if you decide to do this kind of thing, you really need to know everything about Bitcoin, everything about your loan. There's a lot to be known about this whole entire system. So either you need to be immersed in it, or you need to have somebody that you really trust that's advising you on this. But let's say we put up more Bitcoin, we keep this loan going, we get back into loan to value, we stick it out through this entire portion where we're down to 15,000, 16,000 or so, right here. See, we bought right here. We have to stick this out through this entire place that we actually lost. But now, if we go back over, let's fast forward to prices right now. We're going to fast forward to March of 2024, where we're at right now. Prices have been kind of floating right around 60,000 or 68,000, excuse me. So let's say this cycle, where we're at right now in this cycle, we're far from the top. So there's further that you could take this out, but let's say we're just being conservative. We've come up a bit. We want to repay that loan and just get out of it and continue with our own money, basically. So we have now turned that $20,000 into $68,000. So one scenario, what you can do is we come down here. What you owe on this loan is $40,000 is what you've taken. That's the principal of the loan that needs to be repaid. But then you've got that 10% interest, which comes out to be over the year and a half that it took to go from October 2022 to March of 2024. That interest is $6,000 right there. So the loan total with interest and principal is now at $46,000. So we want to pay that off with this $68,000 that we have in Bitcoin, just from putting it in from that $20,000, that half of the loan that we put in. But we also need to take into account taxes, because once you cash some of this Bitcoin that you put in, once you cash that out, you're going to be taxed on it, okay? And so we come down here. I've put in 20%. Now, when you're taxed on long-term capital gains, it will come down to three categories. Either you will pay 0%, and that is good up to any capital gains, and I believe income of up to $15,000 if you're single, head of household, whatever. But we're going to go there. The middle case on taxes is 15%, and that goes from like 15,000 to like 500,000 single head of household. But we're going to go with worst case scenario here. Like I said, I want to be conservative in all of these numbers. I don't want to be too optimistic at all. So I'm going to take the worst case, and that is that we owe 20% on this Bitcoin that we're going to cash out. Let's say you are an astrophysicist and you've made $500,000 in income, plus this little amount that we're going to take out of Bitcoin gets you over that that threshold, and you're going to owe this 20%. So we're going to calculate this off 68,000. We're going to cash out 0.7971 Bitcoin right here. And that's going to give us $55,000 cash, because 0.7971 at 68,000 is going to come to $55,000. So we pay off the $40,000 principal. We pay off the $6,000 interest. So all of this loan is paid off. But I've run the numbers. Cashing, if you bought in at $20,000, cashed out at $68,000, you take that capital gain, you subtract one from the other, and we owe on this 0.79, we owe $35,000. We have $35,000 in capital gains. So 35,000 of this 55,000 we have capital gains on. We take that, times it by this 20%, and our tax there is $7,800 right here. So with this 55,000 that we've cashed out, we have paid off all of this loan, all of the taxes, and everything has come to $53,800. So we overshot just a little bit there, but we are going to take that $1,200 and just add that to the 20,000 that you took over here in the very first place. We took this 20,000 right here and we used it. We used it for living expenses or whatever. So we are going to add that $1,200 to that amount. So you've got $21,200 that you took out on this loan, you used, and after you've repaid everything, that was just a gain that you got from taking that loan. Plus, remember, you only cashed out 0.7971 of that one Bitcoin that you bought. So in the end, you lived off of your collateralized Bitcoin. You were able to spend $21,200, plus you added 0.209 Bitcoin to your Bitcoin stack. So you can see with this example, you can really see how it's possible to live off of Bitcoin, continue to stack into your Bitcoin stack even, and repay every loan that you've taken and your taxes. Now let's get into the risks here, guys, because one, we had that risk where we fell down from 20,000 to 15,000. We had to make this loan to value. We had to take that back down from 53,000 to 40,000. So we had to put up more collateral than we initially did to bring that into compliance. So one of the risks is that your asset falls and you need to keep that in balance. If you can't do that, you're going to lose the Bitcoin that you put forward in collateral. That's the first risk. The other risk is you have to trust a bank. If you're taking a loan like this through a bank, you need to trust a bank. And that is kind of one of the things that Bitcoin really takes out of the mix. So if you're buying Bitcoin and you're letting a bank hold it for you, that kind of defeats the purpose of Bitcoin. So that's something you've got to take into account. Whether you are going to trust a bank with this, or let's say you do it, it's not a bank, but somebody online like Coinbase was doing this for a while. There's several others, but you've got to trust that entity with this loan. So that's a downside. That's a risk that you're going to have to take. Now, maybe the best way to do this is through a decentralized finance smart contract, because that takes the trust out of it. It's just computer code. You know, you're taking a loan and it's completely enforced by computer code, and it's this smart contract. That might be the best way if there is written into that smart contract, you can increase your collateral amount. Because let's say there's no way to do that in a smart contract. As soon as your loan to value drops out of that compliance zone, if that's not written into your smart contract where you can add more collateral to it and bring that loan to value in compliance, if that's not an option, you've easily lost your Bitcoin. So again, guys, these are things that you really need to know what you're getting into. You need to be able to read all of the fine print if you're going to do this, and you need to know everything about the market. Now, the third risk is that asset, this isn't exclusive to Bitcoin. So if you're doing this with any asset, you really need to know the market. And if you don't know the market and what is likely to happen, if that asset never really performs and you take out a loan against it, and let's say it just stays sideways, it doesn't even drop, then you have a $40,000 loan that you're stuck paying off against something you bought and isn't appreciating. So you can see how, yes, this is a tool. It can work greatly if you know how to do it. If you don't know how to do it, or you miscalculate, it can be, you can lose at this game. So guys, again, I am not a financial advisor, but I did want to show you guys how this system works. It really can work if you know enough, or if you have somebody that can advise you on things like this. But there is some risk to it. So I did want to provide this video for you guys to show you. You guys asked for it. I wanted to give you the information. Is it right for everybody? No. Is it right for most people? Probably not. But it is an option, and it's been widely used by a lot of successful people. So it is a tool. You just got to learn how to use it right. So guys, it's been fun. I hope I didn't bore you to death with Excel sheets and numbers and calculations. I know this is a bit dry. It's a fun, interesting topic, but I understand that all of that, looking at numbers, is not the funnest thing. So if you've made it this far, thank you. Please like, subscribe, and share this with anybody that you think might find it interesting or useful. And until next time, guys, stay calm, have fun with it, and I will see you in the next video. Bye.